FOMO is not real, you know? So there's so many levers that you have to be thinking about and pulling when you're trading. It's not just one thing. It's not just, oh, I got stopped out. So you want to know what a good stop is, but you're not sure where to start. In this video, I'm going to talk about stop losses, trailing stops, all the different types of stops, and how you can choose better stops in your trade. We're actually going to do this by looking at the 1 minute chart on ES and NQ, probably NQ because that's what I trade. If you're new here and you're curious about who I am a day trader. I day trade part-time right now. My day job is in sales. I'm trying to fix my mic stand. And I do these videos kind of just to the point, hopefully showing people how to trade. I have a Discord. The link is down below. I'm in there. Good friend of mine named Soul, a few other traders as well. Soul day trades live every single day, and then I am live in and out every single day trading as well, but I post my trades there. So it's a great way to learn. It's a great way to make money. It is a paid Discord, so it'll pay for itself, but you can check all that out first. So before I actually pop open my laptop, talk about what a good stop is, let's talk about stops and the difference between stops on futures and a stop on options. So I'm going to start with options. First, if you're trading options, managing your stops is going to be far more difficult. And that's because the reason that options decrease in value isn't just due to the directionality of the market. And if this is too advanced for you, that's okay. I'll give you an example. We'll use Apple, which I use in all my examples. And let's say that Apple is currently $100. And you buy a call, so you're betting on the upside. You go long on a call at a strike price of $105. So you're basically saying, all right, if Apple moves from $100 to $105, hopefully I'll make some money. The thing that's going to determine how much money you make, though, is really the time to expiration on that, right? So there's a few different Greeks. The Greeks are the levers that control options, right? Delta, gamma, and a few others. We're mostly concerned with delta and gamma at large when we're entering into a position because those are the biggest levers. But you want to know what your expiration is, right? So the closer that the contract is to expiration, the sooner that you need to be right. Because if the contract doesn't close in the money, then obviously the value goes to zero. So if it closes any amount under $105, it could close at $104.98. Contract is literally worthless. That's how they work. So the entire time you buy this contract, you're like, where do I put my stop? How do I make sure I don't lose too much money on this contract? And let's say buying the contract costs you $10. This example is getting pretty in-depth. Contract costs you $10. You've got to worry about time. You got to worry about directionality, right? As it loses value over time, it's called theta decay. So the point of all that is trade futures, guys. I've done a lot of content talking about options, and I still will do some in the future. I've been trading futures, been far more successful trading futures. And one of the best pieces of advice I could give to people who are day trading, right? If you want to be in and out of positions, is to trade futures. Now, if your timetable is more than a day and you're doing swings, I think options are just fine. I still trade options. Well, I'm just not trading options for day trades usually, unless I'm looking for end of day gamma plays. So let's talk about stops on futures, and we'll open up my laptop for this. Now, so all the problems that I just described with options don't exist with futures, which make them a great vehicle for trading in general, right? You're not worried about time at all. You're really only concerned with directionality with futures, right? You do have to worry about, margin and making sure you don't get margin called and things like that. But in general, there's just less things to worry about. So we're going to switch over to the chart, get out our NQ, we'll expand this. I will go ahead and record my screen. Cool. All right. So we are now looking at a chart of NQ. This is on the 15-minute right now. This is going to be a really, really practical example, guys. We'll actually just leave it on this time frame. The market just opened about an hour ago. So we do see it ticking down here with 2 minutes left, closing this bar. It is currently Monday, June 19th, which is Juneteenth. Shout out to my people. For those of you who don't know what Juneteenth is, it's not a celebration of just emancipation. I know this is totally random, but I'm black, so I'm going to talk about it. It is a celebration of the last of my people here in America being told that they were free down in Texas and finally being able to realize their freedom. So cool job, America. I'm glad that we were able to collectively, both black and white people, pull together to make America a better place for all people. Today, we can see that there is right now we have 1 minute and 35 left. And we have this kind of like channel forming, right? So we'll give it we're just gonna do a rough sketch. This is how I draw my lines, by the way. I'm not doing this just like for the sake of example. I'm very, very flexible and liberal with my channels, right? Because they're really just visual. I used to try to be more scientific with it. Don't really need to do that, guys. And I want to enter a trade here, and I'm trying to figure out what a good stop is. So something you'll always hear me talk about when managing stops is that your trade, when you enter a trade, and I talked about this in my last video a bit when I was going through my rules, is that your trade should have a thesis, right? So there is you're looking at the chart right now and something about the setup is making you have a trade idea where you think, I think it's going to go up 10 points or 15 points or 30 points or 40 points. And if it breaks, if the price action changes enough, that should break that thesis. So when I think about stops in trades, your stop should be at a point, not just where it hurts your P&L, but it should be at a point where your trade no longer makes sense. Where if you looked at the chart at that point in time, right, your thesis is wrong. And so say you're looking for a double bottom. Say I'm looking for a double bottom right here. I want this to come down, right? It touched, we got a higher low here, and I'm looking for an actual retest of this level here down at 15,230, which is marked here, right? I want a double bottom here, and I'm gonna go long there because I think it's gonna break maybe my trade idea, maybe a random trade idea here. I think it's gonna go up, and I think we're going to, let's actually zoom out a bit. I think we're gonna go to the 50 fib on this, shape here, right? Pretty standard trade idea, which will give me a target right around here at 15,277. Cool. I think it's gonna do this, and then we'll probably go like this, right? I don't know if this is gonna happen, guys. It'd be pretty cool if it does. This is a 15-minute chart, so we'll never know. I think you can look later, see if that happens. This isn't necessarily a real setup. The point of this video is to talk about stops. It's not a trade that I would take right now, actually, because if anything, I would go short here because of this trend line. But anyways, let's suppose this is a major level and I want to go long here. So I enter long. I go long at 15,230.50 on the dot, hits it. People are going to ask me in Discord, hey Forrest, where should I put my stop? What makes sense for a stop? Well, let's look really far to the left and see what else is over here. So we notice that right here at this level where we bounced, there is some structure here. We also see that there's a little bit of structure here at 15,216. Do a little J there, and we see that there's some more structure down here, right? What I could also do is throw on the visible range volume profile, and this is going to give me the volume at price for everything on the screen, right? So we see that there's a ton of volume at this price down here on this biggest node. There's a little bit of volume at this price, but really I want to look at the volume around the price where I'm entering, right? So the volume around the price where I'm entering, we can actually see is very, very shallow, right? So this is a bounce area. This is actually a good trade idea would have been if you were going short here to look for the bounce right around where we are, right? So not actually a bad trade idea, even though this is my first time looking at it. Then you can see that volume picks up again down here off of these nodes. Now I could refine the number of nodes here to make it more in depth. I'm not going to do that for now, but all of this is just information that's going to help me understand where I should put my stop. So personally, because this is a pretty defined level here, and I'm thinking that we're going to get this long here, and there's some support down here, the lowest that I would be willing to go on this is this 15,216 level, right? Now that breaks my double bottom thesis, but that still gives me a bounce within this price area between this structure and this structure. It also accounts for the fact that NQ likes to do stop runs. So we have the double bottom thesis, we have the volume profile, and the fact that NQ likes to do stop runs. Those are three different distinct pieces of information. These are all aspects that you have to consider when you place a stop, guys. And you just got to do this in real time, right? This isn't necessarily for all trades, but for this trade in general, I know we would be putting in a new relative low within this session, right? And I'm thinking, all right, and a new relative low, that would be a good place to bounce, right? So this is the lowest low. We come down here. If we put in a new low, do a stop run of these people who are here or trapped here, and then it reverses long. If that's a lot of stuff, that's okay, right? Pause the video, go back and think about all the things that I just said. So liquidity, we're looking for liquidity. Where are people entering in out of positions? We know that there's a low amount of volume at this price, but we did have bounces here previously, right? In this low liquidity area. So it's high probability that we do it again. Not a bad trade idea. So I want my stop to still be within this area. I don't want my stop way down here, and I don't want my stop too close. I don't want my stop 2 points away because that's nothing on NQ, right? I want my stop probably down here. If I was actually going to go long here, guys, depending on, and I'm not even thinking about account management, right? Maybe I'm going light on this position because I want to go for a 50-point bounce. I go 1 NQ, I give myself a wide stop, maybe down to 216, right? That's 15 points here. Here to here is 15 points. 15 times 20 is $300. I'm risking $300 to go up from here to here measure. That's 45 points. What is that? Let's just do 20 times 45, 900, right? Risking 3 to make 9. That's a good trade, right? That's a good RR. Not bad at all. If I put my stop right here, let's just talk about this in depth. What are some bad stops, right? So that's my good stop. You could have a closer stop and maybe it's fine. What makes a stop good or not is your ability to have a stop that mitigates risk and still execute on your trade idea. And again, mitigating risk, right? I just did a video talking about risk management actually this past Saturday. Yeah, it's not posted yet, but it will be. You want to protect your capital stack. I talk about this all the time. I do not want my capital to get blown out the water by this trade. So I'm willing to lose $300, which is fine. I don't want my stop down here, right? Imagine if I had my stop down here and I'm like, oh, I'll do a 1-to-1. I'll go 45 points down, which is going to be at, let me click 45 points down, which is here. That makes no sense because look at this price area here. This doesn't make any sense. So it's a 1-to-1 trade. People talk about, oh, you got to do 1-to-1 trades, blah, 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 blah. But that just doesn't make sense. It doesn't make sense with what is down here to do that trade right now, right? And so you just let it go, which is another possibility for a trade, guys. I know some people think that's thinking about that all that is required for risk management is a good stop. Part of risk management is not taking the trade. It doesn't matter what your stop is, the trade isn't good, you know? So there's so many levers that you have to be thinking about and pulling when you're trading. It's not just one thing. It's not just, oh, I got stopped out because my stop was too tight. It's like, maybe, right? Maybe your trade wasn't good. Maybe your entry was bad, right? Something that Sol says a lot is, you know, enter your trade where your stop was, right? Because you have an idea that the price might go there. And so use that idea to enter the trade instead of putting your stop there, and be more patient. And if you miss the trade, that's fine. Nothing happens. Nothing bad happens when you don't get into a trade. FOMO is not real, right? Not participating in the market is totally okay. And when you are participating in the market, you want to be really careful. That is one example. I want to find another example that's maybe a little bit more choppy to talk about this on. So let's actually just go to the 1-minute chart and let's see what this price action looks like. Okay, so we're actually looking at the same chart, 1-minute time frame. We have a little baby double bottom here. And let's clean up these lines on my chart. So we have this little double bottom. We have a flag kind of triangle forming here. And so let's say I want to go short. Say I want to go short here to play this rejection. And so my trade idea is I'm going to go short from here. I'm going to go for 5 points. This is a true scalp, right? That's my price target. And then I expect it to, you know, maybe do that bigger breakout later. Cool. That's my trade idea. Again, I'm doing this for the sake of example. Doesn't matter if it does this or not. What's a good stop? Well, I can see right here on the chart right now that we've already broken this slightly, right? So I can do two things. I could refine my line, which I can and should do all the time. I will refine my lines if necessary. But in general, just looking at the bars here, I don't want my stop right here at 242. This is a bad stop. We'll just mark that. That is a bad stop. And now the question to you all is, why is that a bad stop? Well, it's a bad stop because we can see that we've already wicked right here up to 242.75. We can see it. It's right there, guys. So I'm going to put my stop at least at 242.75, at least at 242.75, and I might put it at 243, right? Because if you just look at NQ's price action, right, we get these double bounces. We see that we came right up here, but we're about a tick off, one tick off. So I want to give this room to breathe without risking too much. If I got in, you know, right now, I'm risking literally less than 3 points to make 5. I'm risking 3 for 5. That's a good trade. That's a good RR. It's a good trade idea, and it's not going to blow me up, right? And we actually see that we are rejecting here. This is an example of a trade that I actually would take. I did a video talking about scalping before. Go check out that video. How are we doing on time? Well, this is a long video. There's a lot of information here, so hopefully this is useful. So don't have the bad stop and do have the, you know, better stop, okay? What a lot of you guys will do, ooh, that was sick. I wish I took that trade. And so yeah, we literally in real time, that trade idea worked out. Would have got that trade. This is exactly how I scalp, by the way, guys. I do this like instantaneously. So when you're talking about trading and then you go long here. So you just go long here and you put your stop right below this area, right? So probably would have got stopped out if I went long right at this price, and that's fine. Well, let's just see where it goes. Are we gonna get some continuation here? So we can see that there's this structure here and we have some structure down here. So let's see if we bounce off of one of these areas. So at this point, I would just let it breathe, but we're not trading live, so we'll ignore that stuff. So that's the better stop here. Looking for a reversal trade here. I guess we will just talk about this. We see that we got a little bounce here. Say you went long off of here, right? And this would have been a good target if I was actually trading and looking at the price action. I'd be looking at cam levels, things like that, blah, 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 blah. Let's just say that I identified this earlier and I go long here. What is a good stop? Well, a good stop is, again, we have this bottom wick here, right? I'm going to put it right at whatever this price is, 15,232.75, right? Or maybe a tick after it. And that's it. That's my stop. So I have at the money strategies in NinjaTrader that allow me to do like 2.3 point stops, like as soon as I enter my position, I'll switch it up. And sometimes I do it manually, but what's more important is that I'm thinking about every single trade idea as it happens. And I'm actually paying attention to the setups. I'm paying attention to the setups, and I'm basing my stops based off of the trade idea, right? Not off my P&L, right? You don't get to trade your P&L, guys. Is something I talk about all the time. You can see that we're actually punching through this. This looks pretty heavy here. So we can go to a higher time frame, see what this looks like. A little bit of wick here. So you'll see here's a really good example that this came right down. Look where it came right down to, right where this wick is. So if you would have put your stop right here, you would have got blown out the water. So if this does bounce, you can see the need to have your stop a little bit lower here. Or even to, if you're just going to draw your line right there, right? It's not just one thing. It's a lot of things all at once and in real time. And the most important thing is to be patient. What a lot of you guys will do is you would go long right now. So let's say you went long right now, and then you have your stop down here. So you go long right now and your stop is down here, right? And let's say the price action goes like this, and it drives you nuts. Because you had a good stop, it goes down, but now you're so red. You're like red, and then it works. You get scared. It doesn't even hit your stop. You sell because you're red, and it goes up, right? You have to be willing to let trades go if you didn't get the entry. If you didn't get the entry down here, if you're gonna scalp. And if you have a late entry, just accept that. There's so many different layers to this. I hope they're coming through. That's why I'm sharing my screen and talking about it. And this is gonna sound so dumb, but you have to apply critical thinking. Guys, the hardest thing about sharing trades, especially scalps, is adding all the layers, right? Because let's just imagine that we're not on a 3-minute chart. Let's imagine that this is the 1-day chart, and you go long now, right? You go long and you're looking for a huge trade. You very well might be red. If people get in on that trade, they're not understanding the structure here. They're not looking, they're not doing this analysis. So they don't understand that this is an acceptable retest here. If I come down to this level, that's acceptable. That's entirely acceptable. The mistake was going long late. Should have went long earlier. The other thing, we can see that there's this shape is converging here, right? So we have this top trend line, then we have these bottom support areas here, a few coming across here. If I was looking for a break of this, it should be pretty soon, right? Either we're going to keep printing this larger channel, right? If we do a strong rejection and get back to the bottom here, but we can see that we're failing that. Well, why are we failing that? Well, we just looked to the left earlier and we saw that there was some support over here, right? So I imagine that this channel is probably going to break soon one way or the other. You need to account for all of that, guys. Critical thinking, and you got to do it in real time. So hopefully that helped. The key points here are base your stops off of what makes sense for that trade. Put your stop where your trade thesis fails. Be patient so that the risk on the trade doesn't negatively impact you, right? All the examples I just gave were like 2 or 3 points, and they were decent RRs. They all had a better than 1-1 RR. I think one was a 3 for 5, risking 3 to get 5. That's a good trade, right? 1-1 is fine as well. Totally fine. A lot of my trades are 1-1s. I have been personally tightening mine, and so my win rate has gone down because I'll get stopped out on like 2-point trades, but I'm really practicing. I'm actually practicing with my real money, trying to get better entries. But that requires a lot of patience, and it requires knowing that you're gonna miss. You're gonna miss more. You're gonna have a losing trade, and then another losing trade, and then another losing trade, because the entries aren't perfect, right? And sometimes I get impatient. I'm like, all right, F it. I'll go back to my 5-point stop, let it breathe. All of that applies in every single trade on every single time frame. Okay, but you cannot. At no point in this video did I say, oh, base your stop based off of your P&L. No, the only part of that exists is in the amount that you put in the position, right? So I was trading in Q. Most of those trades were a couple $100 upside, a few points downside. If you're trading 5 in Q or 10 in Q, smoke your account. Even on a small stop, you're still gonna smoke your account with a bunch of losing trades. So I think that's it, guys. I hope that was help. This is a really long video. I haven't done a video this long in a minute. Yeah, let me know if you have more questions. Definitely join the Discord. The Discord is Trade Edge. Drop me a message if you do join based off of this video. There's another Discord, which is Force Trading, which is just my Discord. I'm changing that over to just long-term investing though. But in any case, I appreciate you taking the time to stop by and learn something, or maybe even just be entertained watching me speak into this microphone. In any case, please do subscribe to my channel. Hang out with us in the Discord. Great people in there. We're fun. We're really serious traders. Nobody in there is going to really try and like sell you on anything, or we're super cut and dry, guys. We're going to tell you to your face what you need to do to get better. So I'd love to have you in there. In any case, my name is Force. I invest in stuff. You should too. I will see you in the next one. Peace.